The Kenya Revenue Authority had targeted to collect 1.3 trillion shillings in the year to June this year. But as has been the case in recent years, the taxman is likely to again miss the revenue collection target. This could be blamed on the delayed rollout of the Excise Duty Act 2015. Tax experts from PricewaterhouseCoopers say the proposed amendments on the Income Tax Act could help KRA to increase its annual tax collections.
It's the introduction of the new income tax bill, I guess, and this is basically a complete overhaul of the current Income Tax Act. Now, our current Income Tax Act is pretty old. It's the successor of what was the East African Community Income Tax Act.
The government is currently in the process of reviewing the Income Tax Act to make it simple, reduce cases of tax evasion and avoidance, as well as widen the tax base. The amendments will also seek to review incentives offered especially to companies that are outdated, as well as review tax bands for low-income earners.
The bands need to kind of move the income tax band from what's the lowest entry point into the bands probably needs to move up a little bit more. It hasn't kept up with inflation over the years. There has been inflation year on year, and those bands have never moved.
Mukora says even though the Tax Procedures Act 2016 deleted provisions that allowed landlords an amnesty from rental income tax, KRA is still offering the amnesty that runs until next month, something that is denying the taxman millions in revenue.
Tax Procedure Act categorically deleted those provisions from the VAT Act. Naturally, what one would have hoped is that, or what would have expected is that those provisions would have then been incorporated into the Tax Procedure Act. They were not.
They say there was need for the National Treasury to introduce tax measures that would tap into the informal sector through consumption taxes so as to broaden the tax base. Paul Koros, Channel 1 Business.